Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here, and welcome to this month's training for you. And in this training, I really want to take a step back from all the chart reading techniques and stuff like that that you get actually in the membership area, and the trading systems and the mindset and all that sort of stuff. But I want to give you guys a bit of a 10-foot view of the way that it's important to be looking at these markets, and also some of the mistakes that a lot of people are making when it comes to getting involved with these markets, and they're incongruent in the way that they're doing things. And so I want to talk about trading and investing and why you shouldn't mix them up, and why most people do, and what causes them to actually go backwards, and what are the differences, because they are differences from trading the markets and investing in the markets, and then also how you should approach it moving forward. All right, so let's actually get started. Let's get straight into this right now. There is a differences between trading and investing and what actually happens there. Okay. A lot of people make the mistake of doing investing analysis. So what is investing analysis, right? You're looking at fundamentals of a company. You're looking at the PE ratio, looking at the cash balances. You're looking at how's their profit going, what was their latest earnings report, et cetera, right? You're doing all that analysis. Also, you're doing is analysis of fundamentally what's going on in the economy right now. Makes sense? Like, is something happening in the economy right now that's going to affect different types of companies out there? Like right now, we're going through a bit of a recession right now, and so the economy effect is actually going to affect some companies out there more than others. Like, for example, airlines. Okay, as an example here. So that is what we call fundamental analysis, right? We're looking at the big picture here. We're doing our research, looking at the fundamentals of a particular stock, and looking at the economy. But essentially what we're doing, right, we're saying, okay, we're looking at, because investing is all about long-term buy and hold, right? And so what we do is we do the analysis from an investing point of view, where we're looking at the fundamentals of a company. Okay. Now, what most people will do is, this is where they get it wrong. They will take an investing research approach to the markets. Oh my goodness, the economy is going to the shitter. Everything is falling apart right now, and so therefore I should be short in the markets. They short the markets. 2 days later, they get out because they didn't go down. Now, I want you to see the complete wrong thing with that there. They're taking a long-term approach of investing in the markets, right? They're looking at the fundamentals of a company or a stock, and they're getting into that, which, as you know, fundamentally fundamentally the company shows its profit, shows that in the price over time, right? Because investing in a stock is going through the emotions, going through the pullbacks and swings and all that sort of stuff. That's investing. And just because, and so therefore they get it. So therefore they do the fundamental research, and then when they trade the markets, so they actually do it. They do a trading positions where they get in today. Like, for example, some people last month of doing this recording as the market was crashing, they would have shorted the stock or shorted the markets, and if the market went up 2 days, they would have gotten out. But their analysis, their research to the way they trade the markets is incongruent. It's so important to not do a fundamental analysis, which is an investing approach where you buy and hold for maybe 1, 2, or 3 years, maybe more, right? Maybe even shorter. But it's more of a longer term approach. It's so important to not do a fundamental research and then go trade the markets. Now, trade the markets is where you're in and out, where you're very active, right? Trading is an active activity. You're getting in at certain points, getting out at certain points. Where investing is you're buying it and letting it go, right? Just letting it go. And so that's what a lot of people do, and they make that mistake of that. Oh my goodness, things are really, really bad, so I'm going to short the market. The market may go up 2 or 3 days, and they think, oh my goodness, I got it wrong, I should get out. But the way that they approach the market is completely wrong there. Makes sense? So what we should be doing is we should have our analysis and the way that we are approaching these markets congruent with each other. So what does that mean? That means if you're looking to invest in a stock, if you're looking to buy, hold a stock because you know it's fundamentally good and everything is really, really good in that stock, well then, if you're looking to do that, then the most important thing to do is that you want to see a nice pullback in the stock, okay? Because every stock does this. Every single stock does this. And so I'm going to do a bit of drawing here. What happens is that let's have a look at this here. If we have this is going to be F for fundamentals. All right, we have a good fundamentally stock, right? But just because a stock is good fundamentally doesn't mean we're not going to get pullbacks. That's the way the markets work, right? We go for a run and then we have a pullback. We go for a run, then we might get a sideways movement and then we go for a run. So when you're investing, if you found a good stock that you want to invest in, then wait for a good dip. Wait for a good pullback on that stock. Because remember, all stocks go through good pullbacks. Wait for a really, really nice, good big dip and then buy in on the dip because you know you're buying in on a good, fundamentally good company right now, and then ride the move. What you don't want to be doing when investing into a stock, buying into a stock, is buying as the market's been going up for 2 or 3 or 4 months, because we're likely then go through another month or two of a bit of a pullback. Wait for a big dip. So when you're investing in the markets, you're not trying to buy the exact bottom. You're not trying to buy all that sort of stuff. You're just trying to buy on a big dip so you can get in at a good price, and then over maybe it takes a good 2 or 3 months for that thing to bottom out and then go for a big run. At least you bought on a big dip. Okay, so investing in the markets is all about having good fundamental research about that stock, and then also waiting for a big dip, right? As the whole analogy is buy the dip, sell the rip, okay? So many amateurs that when they're doing the investing, or actually amateurs do what I was saying in step 1, which was they do an investing approach and then they trade it. Like I'll give you a good analogy is that the crypto market. So many people were saying, oh my goodness, there's white paper out about this crypto market and they've got so many good fundamental things coming at the market, I'm going to buy it. And a week later it goes down and they're like, oh my goodness, I thought this was a good company, this should have gone up. And it's like happens over time, right? Fundamentally and all that sort of stuff happens over time. So if you're investing in a stock, make sure you buy on the dip first and then sell the rip. This is, if you're buying on 2 or 3 months up here, you've got such a lower probability. I reckon you have a 70% chance of actually picking a top and then waiting for, and then having a good 2 or 3 month pullback after a good 3 or 4 month run. 70% chance of a pullback. But if you wait for a good, say 5, even a 10% correction on that particular stock, but you know it's fundamentally good, it's got good cash flow, it's making profits, it's got very little debt, etc., etc., etc. Well, wait for a good dip and then buy on the dip. You're probably having a 70% chance of getting in here. You may not pick the exact bottom, but you're not caring about that. All you care about is where it is 2 years from now. And we're likely to see something like this. Make sense? So that's the fundamentals side of things, and that's the investing side of things. If you're investing, use that approach there. Now, let's go have a look at trading. Trading is all about an active approach, okay? So let's look at trading here. Trading the markets is an active game. So trading the markets, if you trade in the markets, we're mostly getting in and getting out on a short-term basis. Okay, so when I'm trading the markets, and I'm getting involved with the markets, then I have my system, and I'm trading the market with my system, right? So like for example, me and my private clients. Oh, by the way, if you're interested in becoming a private client of mine, where you're going to see my strategy that I trade, get me as your coach, then just email me at help@mastertraderlab.com. And then we can set up a time if you want to join that actual private coaching group where I'm coaching you every single day as well too. So anyway, so back to that there, right? Trading is all about an active income. Now, one of the biggest mistakes that most traders make is there's no consistency when it comes to their trading. So one of my earliest mentors said to me that, he said, Johnny, if you want consistent results in trading, you must be consistent. And what he meant by that is, the biggest mistakes that I did when I first started trading is this one trade here was based on one thing, the second trade was based on something else, third trade was in a fourth and fifth and sixth, right? These were all based on something different. So there was no there was no congruency with the system. So what we're looking for is some sort of a pattern, right? Some sort of a pattern and a setup. And obviously in this membership here, you've got a couple of different trading setups, but the trading setups is 5% of your success. So here we go. If we have a look at this here, let's have a look at this pattern here, okay? And I'm going to say this is 5% of your success. And then we have this other 95% over here. All right, 95% over here. What do you think this 95% of your success is, right? So whatever pattern you pick, there's a couple of different trading systems in the membership area, or if you join my coaching program, we have the trading system, right? But where's the 95%? Where do most people go wrong? Well, they do this over here, right? They're taking all the different trades based on different things. Remember, a trading system has a probability, not a certainty on any given one trade. So if you have a 70% win-loss ratio, that means 3 trades out of 10 are probably going to be likely to be losses. But you never know up front which one's going to be the loss. Makes sense? So you try to pick and choose and you get involved with it. So the 95% of your success is how much are you willing to be consistent at sticking to this plan, disciplined to only consistently looking for the trades, disciplined to only take in this plan, and then patient, waiting as long as you have to. If you have to wait a week or 2 weeks or a month for that pattern or that setup to appear on the charts, that's your foundations to you doing really well in the markets, right? Fundamental, that's how you do really well when you trade the markets. So you're consistently showing up every day, you're disciplined to only take in that, and your patience from that there. See, trading is not a difficult game, right? It's not the trading system in the market you have to worry about. It's you that you have to worry about. Because the reason why it's you that have to worry about is because if you're taking all this crap out there, well, it's based on probability, right? How can you generate an income if you have no probability? Because 5 trades or 6 trades are taking on all these other different things. Because if you had 10 trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now, if I said, okay, here's a trading system with a 70% win-loss ratio, and here's 10 trades. And I said, and all these 10 trades met the trading plan from here, and you took all the 10 trades. Can you tell me which one up front is going to be the win in the win-loss ratio, or the losses in the loss ratio? We never know, right? This is where most people go wrong when it comes to trading. Firstly, there is no plan. Secondly, there is no consistency, discipline, and patience. And thirdly, they're trying to be right with the markets. I want to be right. And they think that if they made money, then they got it right. No, you got it right if you stuck to a plan that you know that works and has a good success rate and all that sort of stuff, right? So being right is about sticking to the plan. But also, people would rather be right than rich. So therefore, even though their plan comes on the charts, now they're trying to pick and choose and all that sort of stuff. Makes sense? And before you know it, you're going backwards. Because how many times have you seen have you been following a system, you saw a really good setup, and you're like, oh my goodness, this is definitely going to make a profit. And it doesn't make a profit. It makes a loss. You're like, oh man, this system sucks. And then suddenly another trade comes around, and you're like, oh, I'm not too sure about that trade. But it still meets the plan. You trying to be right. Oh, I'm not too sure. Well, you're throwing your thoughts at it. Who cares about your thoughts? And then that thing runs off for profits. You can never know up front, right? So your thoughts and your opinions has nothing to do with your success in the markets. This one here could be a win, loss, a loss, win, 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 loss, win, win, win. But you can never know up front that these losses here and this loss right here was going to be on this individual trade. So you balance that out with having good risk management. And every time, this is the way that I trade. I have my one system that I trade, and I don't do anything. I don't do anything until that one system. Like for example, last month I had 3 setups, 100% success rate, and that's all I had was 3 trades. And I was in and out of them within 2 days. But it was 100% success rate. More is not more in the markets. Less is more in the markets. And we need to make sure that we are approaching that, because if we're trading more, when we trade more, we're making more mistakes with low win-loss ratio, and it's downhill from there. Less is more in the markets. But on the flip side, trying to be right, let me see if I can get it this time, R-I-G-H-T, Can I spell that right? Right? You trying to be right with the market it's right and wrong. There is no right and wrong. One of my earliest mentors said, you know what, John? Most people would rather be right than rich in the markets. He said, I'd rather trade it and make some money. I'm like, what? He said, most people would rather be right than rich in the markets. I'd rather trade it and make some money. And he's like, and I'm like, I was thinking at the time, hang on, don't you need to be right to make money? And I didn't understand that. But as I've gotten on, that was like 15 years ago now, but as I've gone on as a trader, now what am I doing? Now it's like, I get it. Because most people saying, okay, they don't, or they try to think, even though it meets the rules, I don't think this is going to be a profit trade, so I'm not going to take it. And guess what ends up happening? Murphy's Law is the trades you don't take make profits, and the trades you do take probably make a loss. But if you just stuck to the plan no matter what, and the way to do that is having good risk management. So every time I get into a trade, even with the trades I had last month, I had 3 trades, 100% success rate, but I didn't know that. One of them could have been a loss. So I always say to myself, my number one rule is not to lose money. And what I mean by that is protect my capital as much as possible. So when I get into a trade, it's like I'm getting into the trade because it meets the plan. But if this is a losing trade, am I protecting myself as much as possible? Right? So what I mean by that is like, how much risk is on my account? If I have a losing trade here, could this be a 20% loss on my account? If so, way too much. Or if I have a losing trade right now, if this is a losing trade, I've now had a 2% risk, right? Now we're talking, right? Now we're like, okay, and it's the balance between the losses are not hurting you and the wins are not exciting you. And that's how you grow, right? You grow and grow and grow and grow and grow from there. Because the losses are not hurting you and the wins are not exciting you. You're not trying to pick and choose. Your job is to trade the markets when the pattern appears. Simple. So that's where the biggest trading, this is where the overall mistakes that are made so much in most people's plans, and it's never the market, it's not the system you have to worry about, it's you have to worry about. Because if you're not consistently showing up every day and following one plan and disciplined to only taking that plan and being patient, I don't care if you have to wait a whole month for this pattern to appear on your charts as you're running through your scans or going through the markets or whatever pattern that is, right? Choose one of the system in the membership area. Or if you have something else, just choose one thing. Don't be all over the place. If you want consistent long-term results, you must be consistent at trading the markets. And don't throw your fundamental analysis into the trading analysis, because it's not right. Because when you trade the markets, you're drilling in and out on a short period of time frame. So even bad fundamentally stocks are going to go for good 2 or 3 months, 2 or 3 or 4 week run sometimes. Or just because there's a really good fundamentally stock doesn't mean it's not going to go through a pullback. Then it may be a setup for you. See what I'm saying through there? So in a nutshell, guys, that if you want to become part of this world, and something that I talk about with my private clients all the time, that if you want to become part of this world called trading, you must start to apply those rules. And it's not brains, it's not smart, it's not anything like that that helps you get ahead. It's your ability to say, you know what, there's this whole bunch of stuff out there, and I don't need to know what actually happens tomorrow for me to make money. I don't need to know if I'm getting into a trade. I don't need to know the outcome of this trade to make money. All I need to know is that, am I sticking to this plan 100%? Because I know in the back of my mind with absolute certainty that if I take 10 of this exact same setup, most will be profits, some will be losses, rinse, recycle, repeat. And if you do that for a whole 12 months, you make good money. If you don't do that and you don't follow the plan, you're taking all this other garbage and taking too much risk, then it's all over from there. So step one when it comes to trading, you need to work on yourself. Are you being consistent at following a plan? Whatever that plan is for you. Discipline, patience. And then from that, we need to start building that foundation of having good risk management around that as well too. So I hope you enjoyed this month's training. Do not mix up trading and investing in itself. If you're trading, just follow the patterns. Forget the fundamentals, because they don't mean jack crap to you. They're actually persuading, if you think the market's going to crash and you get a bullish setup, but your system says go long, well, you're not probably going to take that setup, right? Because you've been listening to all this garbage out there. And, oh my goodness, the market's going to crash. And they don't know anyway. I don't know what's going to happen. No one knows what's going to happen, right? So the less garbage you can listen out there, the stuff out there, the more it's not going to impact your decisions. Because at the end of the day, it's always the market, right? It's based on the system. The system has a win-loss ratio. So anyway, guys, hope you enjoyed today's training. Get to work. Are you being consistent, disciplined, and patient? What is your pattern? What is your system that you're following? What is the success rate that you've proven to yourself via backtesting, research, or whatever? And then start small and grow from there.